very much a green screen. So let's straight away get to our first market conversation on Trading Hour. Chirag Mehta from Quantum AMC is our guest on the show, and let's get some perspective going with him. Chirag, great to have you on. Thank you so much for joining in. You know, I think investors who are already invested in the market, they are simply smiling, looking at this rally continue, this massive bull charge continue. But the ones who are looking to deploy additional money, they're the ones feeling a little left out, confounded, confused. So at the outset, what are your opening thoughts on what is turning out to be, you know, the breathtaking rally pretty much continuing?
Thank you, Surabhi, for having me on the show. So I think what we are seeing is a continuation of recovery in the economy. The economy looks robust. All the leading indicators look pretty constructive in nature. So I think the rally is here to stay. So we are positive on the economy, and that is what is driving the markets to some extent. There is hope that there could be China stimulus. The growth expectations on the global world are also changing. What was earlier a pessimistic scenario that global world is going to slow down, it's not happening anymore. So in all sense, I think there is support from the global world from a growth standpoint, as well as India is doing very well from a growth perspective. So that tells us that the rally is here to stay, and I think we are pretty constructive. And the levers that have been taking this rally are here is going to be the same levers that we'll see going forward as well. Led by capex, government capex. Now we are also seeing green shoots in private capex coming through. Consumption is still slow. We have seen uptick in two-wheeler sales in rural areas, and that is more driven not by new purchases, but our sense is that it is more driven by a replacement demand. If you see the last big cycle that we had in two-wheelers was because of was about 8-10 years back. And now we are seeing more of the replacement demand kick in, telling us that there is recovery in that space as well. So overall, we are very constructive. The capex plays here, which will be the biggest driver, followed by household capex. We are seeing housing activity being very buoyant, which we think will continue and therefore has a cascading effect on the overall economy, right from building materials to other ancillaries and consumer discretionary that come along with it, along with consumer durables. So I think there is a lot more traction going on in the economy, and it's going to be a similar growth trends that we have been seeing, a continuation of that for some more time.
Do you want to share some of your portfolio ideas or recommendations for this capex theme? Because it's been running for the last 2 to 3 years and most of the stocks have done very well. So it's great if it's already in your portfolio, but for fresh investment to play this capex theme going ahead, which stocks would you recommend?
So I think if you see from a capex standpoint, a lot of it is in the price because, there is demand, there is traction in that sectors, industrials, be it power. So all those, there is a good amount of traction in those sectors. But much of it in the price. So you need to look at niche areas. For example, when it comes to power, there is a great theme going on in, say, smart meters, for example. So you need to look at those kind of niche plays which have not yet fully priced in the order flows and therefore the revenue growth and earnings growth. So probably you could look at those sectors and within those sectors, you'll have to look at niche plays rather than looking at just frontline plays within those sectors.
Any other niche plays that you would, ask investors to look at, analyze? So smart metering is one. Anything else that you would, you'd like to highlight?
So if you look at even within those sectors, like recycling is a big story that is playing out. You have water-related, waste-related plays, which are looking constructive from a long-term perspective. So you have many things, but you need to look beyond the frontline growth trends. And if you were to look at within the frontline growth trends, it's going to be the usual banking and financial sector or the IT sector is what we like. And in the consumer discretionary, you need to look at themes like, for example, two-wheelers, four-wheelers, where we have a constructive story playing out. And we think that will continue for some more time.
Okay, so that is the capex theme. Tell us about some of your other biggest portfolio overweights. I mean, whether it's BFSI, consumer. Just tell us what your next big bet is beyond capex and how are you looking to play it?
So from a valuation standpoint, we still like banking and financial space pretty much. Valuations are still constructive. There is not much worry from a NPA perspective. There is still growth. Only lingering concern was the deposit growth that we were not seeing in the banking sector. But our sense is that given the franchisee that these many banks have, I think there is some cyclicality to that deposit growth. But beyond that, we think that deposit growth will catch up as we go forward. So there could be some deviation away from, for example, banking and CASA and fixed deposits that we are seeing. But I think into capital markets, etc. But probably over time, I think you will see as incomes increase, there will be space for even some sort of fixed deposit growth or CASA growth, as well as the growth in capital markets. So we like both the themes. From a banking standpoint, banks look very conducive from a valuation standpoint. Whereas in the capital market space, we have seen a good run up already in many of those names. So probably at some correction, we could be looking at buying those further in our portfolios.
About IT, frontline IT is one of the preferred sectors along with banking and I think two-wheelers. Now, in IT, over the last 12 or 18 months, it's been some of these mid-cap IT stocks where the growth rates have been strong, like a Persistent, Coforge, or some of the ER&D plays, like KPIT Technology, Cyient. These are stocks which have outperformed. Going ahead, should investors continue to bet on the outperformers of the last 1 to 2 years, or is it time to look at the at-scale big services companies to make money?
Sure. I think we like this space across. So in large cap portfolios, we have exposure to the frontline names. In these small cap portfolios, we have these small budding names in the IT sector. So we like the space across the spectrum. What we are seeing is there was some sort of pessimism related to growth trends in this sector. But I think that pessimism was overdone. And we were big buyers when these stocks corrected in the interim, and we continue to like these stocks. We are constructive that outsourcing is here to stay and will only increase going forward. AI trends was one of the other headwind that we were hearing from market experts. But AI, I think Indian tech companies have shown time and again that they kind of catch up with the emerging trends and benefit out of it rather than lose share. So from those perspectives, I think we like this story. I think AI, the biggest beneficiary will again be Indian IT companies. We are seeing already IT companies shape up their training programs towards AI. So I think we like this space across the board.
Chirag, finally 30 seconds left on the chat. I just want to end with your take on what's happening in the commodities universe and whether you think there's a fundamental reason to play these stocks. I mean, look at the way metals have shot up. Even refiners have done really well for other reasons beyond just the price moves. I mean, the expectation of pretty high margins. Just leave us with your take on oil and gas, on metals, the commodities play.
So our call is that metals and oil probably should trend lower from a price perspective. We think that currently the news stories around China stimulus growth holding up well in the developed world, etc., has led to this uptick in metals. Probably, I think it's kind of moved beyond what we would have expected. So I think both oil and metal prices should head lower over a period of time. As this story kind of fades out. So we think that, best of the prices probably are behind us. Probably metal prices have peaked. And therefore, we don't see much traction in this sector in a big way, barring some places where we have valuation comfort because of the earnings growth that will kick in many of these, which still look buoyant for a couple of years. So over and above, we are kind of not buying anything in this sector at this point in time.
Right.
And that's what our take is.
Chirag, thank you very much for joining in. Look forward to more such conversations. From equities to commodities.